Not in our mind. They are for a very short period of time, but they're not traditional dividend pays through a cycle. And let's just extrapolate this point. So when you're looking at an income producing portfolio, you've got the quantitative modelling, the filters that come through about the yield, the margins versus risk-free rates, the margins versus the broader index, and you're just looking at the balance sheet all the way through. So any quantitative fund can give you that. Any university graduate can be paid to do that. Now that's called an ETF. You don't think, you put it in. Just put the filters in. Now let's get back to BHP and the big players. Yes, they're paying and offering extraordinary dividends, just like Woodside did 2 years ago. But you can't sit there and assume that Woodside 2 years ago and BHP now is going to be a sustainable dividend player over a decade or so. So they'll pay out dividend, a quality dividend all the way through, but they're not a traditional dividend payer through the cycle. So I wouldn't recommend they go in because of the price volatility of the underlying stock will go up or down more than the low beta income producers. And that's the other thing, you need to try and find as many stocks going into an income style portfolio with a beta less than 1. That means the future sensitivities are lower than the broader market, all things being equal from a theoretical point of view, and that should filter because you're building a selection of stocks in that portfolio. So yes, BHP stands out and a lot of people will buy it for the income and they come from offshore and the ETFs will pick it up, but that's not your traditional dividend payer through a cycle, and there will be a time when they stop recycling that cash to the investor and it'll turn to a growth stock again. So you need to be cognizant of that price, and those people that bought BHP have had to take a capital losses of significance because they identified that dividend, that you've got to understand the total business. And if you dismiss everything I've just said about constructing a traditional income portfolio, don't put too much of the non-traditional ones in there like Woodside and BHP. That's what we'd suggest, and definitely don't put mining services in there. And if someone's promising a 10% promise dividend yield, remember a dividend's not a legal obligation like a coupon, it's a promise, and a double-digit dividend is a very unrealistic expectation to have from any exposure consistently through a cycle.